This is the Average Guy Network, and you have found Financial Tech and the Guide Rock Capital Management Weekly Commentary for the week of March 11th, 2013. I am your host, Jim Collison, broadcasting live from the AverageGuy.tv studios here in Bellevue, Nebraska, and we post the show, including the written commentary, each week out at the AverageGuy.tv. Financial Tech brings you the latest market commentary from the award-winning Andrew Hunt, CFP and president of Guide Rock Capital Management, located right here in Omaha, Nebraska. If you'd like to receive a copy of the written commentary in advance, of course, you can just send us an email, Andrew_Hunt at Guide Rock Capital. That's just Andrew_Hunt at GuideRockCapital.com, and put subscribe in the subject. If you have questions or comments that we can read or answer on the show, you can send us an email, podcast at theaverageguy.tv. And, of course, you can find us both on Twitter. I'm just at Jay Collison, and Andrew is Andrew D. Hunt. Well, Andrew's feeling a little under the weather today, and so we're going to kick right into this thing and get him through it. Andrew, how are you? Good to see you.
I'm well. You're right. I woke up with a little bit of a cold, which coincided with daylight savings time. So I am just, man, I'm just abused this week.
Not a believer in daylight savings time.
Well, you know, I like the longer days. I am thankful for that. I like to come home while it's still light out. I'll take it.
Awesome. How are our markets this week?
Well, you know, it's been, if you've watched the news at all, it was like every day last week there was a headline that the Dow Jones Industrials had set a new record, new all-time high. And so there's been a lot of people asking me, hey, Andrew, what do you think about this? And I try and remind people that, you know, whenever there's a strong market performance, we need to step back and remind ourselves that markets ebb and flow over time. For example, just this year, since December 31st, the Dow Jones has gained 9.9% today.
In one quarter?
Yeah, as of last Friday, so not even a full quarter yet.
Yeah.
And the S&P 500 added 8.8%. And of course, you couldn't get away from the headlines last week. Dow hit record high since 2007. S&P 500 was about 1% off from its record high. So, yeah, we're seeing all kinds of records. And so a lot of people are worried about that. And we just have to remind ourselves, hey, markets ebb and flow, and that's just what we expect. So keep an eye on it. No need to get too crazy. But, hey, let's just watch this thing and see how it happens. Because although there's been a strong performance in the U.S. stock markets, you know, there's still a lot of headwinds that kind of are facing the U.S. economy. Sequestration kicked in. We're going to see spending cuts. We're seeing U.S. earnings in different markets start to slow down a little bit, which could affect stock price because, after all, stock price follows earnings that we've seen in the past. Global markets, which have been largely up as well, continue to face weak and inconsistent growth numbers coming out. So, you know, global markets aren't all that, I'm not all that kind of, maybe we could be a little concerned about as well. And then last week as well, the U.S. Treasury yields, the 10-year Treasuries, rose higher despite the Federal Reserve saying that they're going to keep current monetary policy the same for some time, which is also another kind of vote of non-confidence. So that's really interesting. All that to say, we've had a great first part to the year, 8.8% in the S&P 500 since the beginning of the year as of last Friday. And so we just need to watch this thing, watch the market cycles continue to transform, and keep an eye on it. So I've had a couple of
Andrew,
clients.
you can't say this, but I'm going to. Let me just say, if it's too good to be true, it usually is. Just saying. You know?
That's nice.
It's just, things have been so good in the face of headwind, and it just seems crazy. So I guess I would be cautious myself.
That's good sentiment, Jim. That's good sentiment. I like your opinion there. So I've had a couple of clients in the last, probably year or so, start planning for weddings for some kids. So, and I know you've gone through this yourself, Jim. So I thought it'd be kind of fun to talk about, hey, what if you have a wedding in the future? How should you probably prepare yourself? You know, between planners, venues, food, flowers, cake, dresses, photographers, videographers, and on and on and on. You're probably going to hear a lot of ka-ching. Ka-ching, ka-ching, ka-ching. More than $50 billion is spent on weddings each year in the United States alone. There's a 2012 annual wedding report that came out, and according to that, the average wedding has between 133 and 143 guests and costs more than $25,000, not including the honeymoon. I know my wife and I have been married for a little while now, but we footed the bill for most of our wedding. And ours did not cost $25,000, but apparently that's the going rate these days. The good news is that the average cost of wedding in 2011 was less than the average cost in 2007. However, if you decide to use any designer labels or popular event locations or anything like that, you could see that $25,000 price tag increase from 50 to 100%. And even if you had a few more guests, that could even start to get a little bit crazy. So, Jim, you're probably asking yourselves, how can we keep these costs from spiraling out of control? And I've got 3 recommendations here. The first one is everybody's favorite B word: establish a budget. Setting a budget for a wedding is important, and you have to remember, just like any budgeting process, you could potentially incur some overruns. Things are going to come up. You just know that there's going to be extra expenses with a wedding, so I suggest adding a cushion of 10 to 15% on any cost that you would project when you're thinking about planning the budget. The really important thing here is that you put together a plan up front. That is just super important. Go in with an amount you're willing to spend. Also, you need to understand the venue and reception costs. This is where there's a lot of hidden fees that could get built in. So when you're negotiating the cost of the reception, it's really important to ask the per person cost of an all-inclusive type event. If you're given an all-inclusive price, you want to look out for words like additional costs may be incurred, or plus the cost of setup and delivery, so that you don't get bit with some really hidden fees that could end up busting your budget. And then third, everybody knows this one: you got to make smart liquor choices. If you're going to have booze at the wedding, you better believe that'll run your tab up the wazoo if you don't make some smart choices. You could, a lot of venues charge for every single bottle opened. So to save on costs, you could consider just having beer and wine and champagne for toasts, or you could create a signature cocktail where there's just a few types of liquors, maybe just one, so it really reduces the amount of bottles open. And at the end of the day, you may decide that when you're looking at all these costs, that the best option is to elope or do a destination wedding where you just have a few people attend at an exotic locale, and maybe just have a big party when they return. These days, it's not uncommon to see people cut back a little bit, and that's okay. I encourage everybody, just because it's tradition doesn't mean it has to be done. So think outside the box a little bit. All right, quote of the week. This one is from Victor Hugo, the famous French poet and novelist. It says, "The greatest happiness of life is the conviction that we are loved. Loved for ourselves, or rather, loved in spite of ourselves." With that, what do you got, Jim?
Nice, Andrew. I've done one wedding, and I know I've got a couple more with my 5 kids. I've got a couple more coming, and that's good advice. You can still do a full wedding. You don't have to. It's not either elope or have the $25,000 wedding. We watched our kids do their wedding and make some compromises and come in the middle. And so there's that option as well, as you don't have to have it all. It's tough in the days of reality TV to try and keep up with all these shows, The Bachelor and The Dress and whatever they've got out there. Certainly have put the pressure on, but you'd have to go through all that. So some good advice, Andrew. I think if you can start with those 3 steps, that may save you, because it can get very, very expensive. And I also say give the kids some ownership in the expenses as well. If you're a parent that's going to pay for it all, give your kids some ownership in the expenses. Maybe what they don't spend gets to go to the honeymoon, and they have an opportunity then to save a little bit and maybe not spend all $25,000. Andrew, I know you're not feeling well, so we'll wrap it with this. Some good advice. I'll let folks know that if they're listening to this podcast on the web, and they want to do it automatically on their phone each week. There might be a better way to do it. You might consider Stitcher, STICHER.com. Stitcher is a great way to listen to podcasts both at home and on the road, available in any browser as well as both Android and iPhone platforms. It'll keep track of all your podcasts too. So maybe you listen to this one and Home Tech, and you want to keep track of both of those podcasts. So when a new one comes out, Stitcher will always tell you when you got new audio podcasts out. It's a great way to listen to them as well. And all these shows, the past shows as well, are available on Stitcher. Stitcher.com. Search Financial Tech. It's education for your ears. Be sure to visit Guide Rock Capital. A lot of good information out there. That's just guiderockcapital.com. You can follow, of course, Andrew on Twitter at Andrew D. Hunt, and get all the show notes to this show, including the written commentary, out at theaverageguy.tv. Now, Andrew and I say thanks for listening, and we'll catch up to you next week. Hopefully, Andrew, you'll feel better. And remember, be smart about your investing. Guide Rock Capital Management, Inc., or Guide Rock, is a registered investment advisor that is registered with the state of Nebraska and located in Omaha, Nebraska. Guide Rock and its representatives are in compliance with the current registration requirements imposed upon investment advisors in the states in which they maintain clients. Guide Rock may only transact business in those states in which it is registered or qualifies for an exemption or exclusion from registration requirements. Important information describing Guide Rock's business operations, services, and fees can be viewed on the SEC's website at www.advisorinfo.sec.gov. Guide Rock will provide Form ADV Part 2, which serves as the firm's disclosure document to all clients. Copies of Form ADV Part 2 are also available to interested parties upon request. All investment strategies have the potential for profit or loss. Past performance is not indicative of future results. No current or prospective clients should assume that the future performance of any specific investment strategy, or product made reference to directly or indirectly on this video, website, or indirectly via hyperlink or any affiliated third-party website will be profitable or equal to past performance levels.